Hey guys, it's Gary here. I will be doing a monthly webinar series with one of my favorite mortgage brokers, Jordan Thomson. She's a very high performance mortgage broker that I've been working with for years. She's even done my mortgages, been extremely helpful to a lot of my clients. And she's always got a pulse on what's going on in the industry. So this webinar series will be talking about what's going on in the mortgage industry. And specifically this first episode that we're doing with her, we're gonna be talking about the topic that's on everyone's mind, the mortgage interest rate hikes this year. So without further ado, here's the webinar. So welcome, Jordan.
Yeah, hey Gary, how are you doing? Thanks so much for having me. I'm really excited to do this with you.
There are talks about rate hikes this year, 2022. What are your predictions for 2022? And
you know, when the pandemic started, we saw a massive cut to the prime rate by the Bank of Canada. So we're sitting at a very low prime rate right now at 2.45%. Now, as we've moved through the pandemic, the Bank of Canada had said, we're going to keep rates low. We're going to keep rates low. We really need to do that to stimulate the economy and so forth. So now that we're doing a little bit better, the Bank of Canada is now saying, actually, we're going to start raising rates earlier than we had predicted. So, I mean, for the past year or so, I've been telling my clients forecasts are for the Bank of Canada to start raising their rates kind of in the spring or summer of 2022. Now, that is no longer the case. We had expected our first rate hike actually at the past meeting, which was just at the end of January. We were surprised, brokers were surprised, people in the mortgage industry. We thought the first rate hike was going to happen. It did not. Tiff Macklem said, however, it will be happening. So our rate's going to go up. Our variable rates that are linked to the prime rate, are they going up? Absolutely. The next meeting is in March, the beginning of March, and we are definitely going to see. I say that I shouldn't say definitely.
no guarantee, but high probability.
Very, very likely we are going to see our first rate hike of 2022. Now, the rest of 2022 is going to be fast rate hikes, or there are going to be a lot. We're actually expecting upwards of potentially 5 rate hikes in 2022.
Wow.
They're going to do them quickly, and then they're going to wait and see what it does for the economy, how it, if it does cool the housing market. They're going to kind of raise quickly, then wait. I've even heard some people say they're going to raise them really quickly, and then we're going to have a crash, and so they're going to have to pull back.
Really?
And that's kind of the thing with rates. It's really hard to tell where they're going, right? You always hear, well, we don't, I can't totally say with absolute certainty. But what I can say is that the variable rates are going to be increasing. And here's the distinction. The variable rate is linked to the prime rate that I'm talking about. Mm-hmm. So that's linked to the Bank of Canada. Right now, I'm getting people calling who are in fixed rates, and they're saying, oh my goodness, is my rate going to go up? Should I lock my rate in? Well, the fixed rate is linked to the bond yields. It has nothing to do with the Bank of Canada. So please don't worry. If you are in a fixed rate, guess what? You're fixed. You've already made your decision. You're in there. The rate that you've got is going to be the rate that you have for the rest of your term.
So you anticipate the variable rates increasing. My understanding is the rate hikes, even if they do rate hike, it's probably only by like 0.25% every time, right?
History has shown us that, it's at 25 basis points per rate hike. However, the Bank of Canada actually can raise it more if they so choose.
That's right.
So we have heard, and again, we've got the bank's economists telling us different things.
Yeah.
Some are saying, oh, it's going to be 8 rate hikes in the first year. Some are saying, come on, be realistic. It's going to be 4.
Yeah.
maybe 5. I've heard 2.
Yeah.
So maybe we're going to see a 50 basis point rate hike, at this next Bank of Canada meeting in March. Maybe we'll only see 25 basis points and then, kind of consecutive rate hikes throughout 2022. But let's call it a 1%.
Probably this year.
Increased prime
Yeah.
rate in 2022. I think that kind of takes into account,
Yeah.
That's an average of what everybody's saying.
Mhm.
So that means that your rate, the prime rate would go from 2.45% to 3.45%.
Okay. And what does that equate to for like the person with a $100,000 mortgage?
The way that the variable rate is expressed is prime minus or plus something.
Yeah, that's right.
The majority of people have, if they got their mortgage within the last year or two, they might have prime minus 1%. That's it's incredible. We haven't seen rates that low.
That's right.
So if prime rate rises to 3.45%, what your actual rate that you're paying is 3.45 minus 1%. So your rate is actually only 2.45%. So right now, the fixed rates, they've already done their increases. They're sitting at 3%, 3.1, 3.2, 3.3%. So if you've got a 3% fixed and currently you're paying 1.45% on your variable, that's like 5, 6 rate hikes.
Yeah, it's a huge
before you even get to the fixed. Right? So that takes you a full year, maybe even a year and a half. So to answer many people's questions, should I be locking in? If you've got a rate of prime minus 80, prime minus 90, prime minus 110, no.
Yeah.
The math supports staying in the variable.
Yeah.
Let's talk later this year. But don't lock in now. Why pay 3% as of today?
Yeah.
You don't want to do that. I mean, sure, if you've got prime minus 20, maybe. But let's talk.
Yeah.
Let's talk. Why did we choose the variable to start? So that's definitely what I'm seeing on my desk right now. Everybody calling saying, should I be locking in? And they have like a 1.35% mortgage rate. And I'm like, no, don't, because if we turned around and locked you in, you'd be looking at 3.1.
Usually, like even with a small 25 basis or 50 basis point hike, it's usually like only tens or 20, 30, $40 extra. It doesn't bankrupt people, right?
For every $100,000 borrowed per 25 basis points rate hike, so that's 0.25%.
Yeah.
It's equivalent to about $13.
Yeah.
Per 100,000. So if you've got a $400,000 mortgage,
13 times 4,
13 times 4, basically.
$52?
50, let's call it $50 a month.
Yeah.
That's right. Yes, it might be in $50 increments.
Yeah.
Throughout this year, might be a couple hundred extra bucks by the end of the year.
But it's not a big deal. I was actually looking at I was Googling the inflation rate. It's 4.8%. I was like, holy cow, it's higher than the mortgage.
Right, exactly. Yes.
Yeah. So that's more of a concern than mortgage rate hikes.
We've been really spoiled with these rates. People with a 1.3, 1.4%.
Yeah, I mean, wow.
I did a 1.15% just I guess a month ago. I mean, that's just ludicrous.
Yes.
Ludicrous.
Yes.
In my own mind.
I wish I had one of those mortgages.
I know you do. And just everybody out there, everybody can't.
It doesn't apply for everyone.
It doesn't apply for everyone, and it was a special that only existed for a couple of weeks.
Yeah, exactly.
But very, very low, and really all we're doing is coming back to pre-pandemic rate levels.
Yeah.
And even pre-pandemic, you know, they were extremely low, right?
Yeah.
So, and even if prime rate does go back up to pre-pandemic level, 3.95%,
Mhm.
you know, it hasn't been higher than that. I've got a graph, you know, for the past 12 years, it hasn't been higher than that.
Yeah.
So, you know, if you've had a mortgage for more than 2 years, you were already paying that,
Yeah.
you know, so, and I think that that actually brings me to a question for you, Gary.
Yeah.
I know I have my thoughts on, will higher interest rates cool the market, or at least the demand?
I think
You know, buyers, what do you think?
it might actually like heat up the market because the fear of missing out, right? The fear of, oh, the rate's
Right?
going to go up even higher. I better buy now. And so it
Yes,
actually might increase demand because there's that urgency all of a sudden. Hey, we're going to increase the rates. You better buy something now.
right, right.
Yeah.
Yes. Well, I was just on a call with the TD economist, and they're, you know, they're saying we're definitely seeing that kind of that pull forward in sales, people trying to beat those rates.
That's right.
And it's just increasing the demand.
Yeah.
And so, you know, that begs the question. Everybody's saying, okay, well, you know, are we going to have a massive correction in prices?
Yeah.
And personally, you know, this year, I do not see, you know, a huge drop in
Yeah.
prices
Neither do
happening.
I. Neither do I. I heard someone say that end of 2022, early 2023, there might be a slowdown, but slowdown doesn't mean a drop in prices. It
Right,
just means, a lot of the inventory was, absorbed, right?
right,
But it
yeah,
doesn't mean that you're going to get a 10% discount or anything like that.
right. And
Yeah.
I would tend to agree with that. I think that we're definitely still seeing, you know, I can see, I have a lot of files on my desk. There are a lot of buyers still out there.
Yeah.
And there's lots of demand for sure. So I'm guesstimating kind of the end of 2022, early 2023, when we kind of start seeing a leveling off too.
Yeah, I'm still seeing a lot
prices.
of I'm seeing a lot of subject free offers. I'm seeing a lot of bidding wars, like even in the 10 to 20 offers. So for 10 to 20 offers, like if a deal goes and there were, let's say, 16 offers that I was a part of like recently, one person won, that means 15 other buyers are out there for competing on the next one. And so it's not really slowing down. And that's what drives prices up actually too.
Right, exactly, exactly. And you know, ironically, you know, we've had these multiple bidding wars for, you know, a couple of years now,
Yeah.
right?
Yeah.
And I would say in the beginning, there was a lot more buyer fatigue. Now people are kind of getting used to it. They have the expectation, it's going to take me 10 goes.
Yeah.
Are you seeing that? Like
Yeah.
it used
Yeah.
to be,
Yeah.
I've done 4, I'm done. And
Yeah.
now people are like, okay, let's keep going. Let's keep
For
going.
the seasoned buyer, when I say seasoned, somebody who's gone through it a few times, they're like, oh yeah, it's normal. But then for the first time home buyer who's never done it before, they're like, oh my gosh, it's a bidding war, right?
Right, right. And I was still, you know, we're seeing people losing out, you know,
Yeah. Yeah. Yeah.
many times, and they just keep going at it. Whereas I think that's a little different than it was, you know, at the beginning of the pandemic.
That's
when
right. That's right.
people
Are
were
banks
like,
still quite strict in terms of like qualifying people and giving pre-approvals and such, or it's still relatively similar to before?
a couple of things changed. Now it's been a couple of years, so
Yeah.
it's kind of, I think it's going to be the norm going forward. And
Yeah.
we talked about this about a year and a half ago,
Yeah.
actually. One thing, you know, job letters and pay stubs, they can't be any older than 30 days.
Yeah. Yeah.
So unfortunately for people that are taking, you know, it is taking months to finally get something. We are needing those updated income documents. So that is a little bit weary.
Mm-hmm.
However, because it is such a hot market, we want to make sure that we have the most up-to-date documents on file,
Mm-hmm.
because I'm working with subject removal turnaround times of, you know, 2 or 3 days, whereas, you know, a week, it used to be a week, then it was kind of 5 days, now it's like 2 or 3. So
Yeah.
I need everything up to date all the time if you're going in to those offers. So that's number one, making sure that we've got the most up to date documents. The other thing is for self-employed individuals. You know, we haven't had to do, and both Gary, you and I are both self-employed. We haven't done our 2021 taxes. We don't have to do them until June. So we're still working on 2019 and 2020. So lenders want to make sure that those self-employed borrowers are still working, that their businesses, whether they're sole proprietors or corporations or whatever, are still in business and still on track with what income I'm using. So they're going to be requesting 3 months of business bank statements to show that you've got deposits going in, or perhaps you've got updated contracts or invoices, perhaps GST returns. So lenders are definitely requiring those as well for every single self-employed borrower I've worked for. So they want to make sure that your business is still, going.
Okay. In like a busy market like this, are lenders, there's more and more files on top of lenders' desks. Are they less patient with people in the sense that, like, oh, if you don't have everything ready, I'm like, likely we're gonna deny you. Like, we just got too many deals coming, so like, unless you're super qualified or super good, we're gonna reject you. Is it like that, or?
Well, there are definitely, yes, and you're totally right. Lenders, underwriters, fulfillment, they're just as busy as you and I are, right? We're throwing files all the time. Part of working with a broker is that I work with many lenders. So I know which ones are faster than others. So if Gary, you came and I've got a 3-day turnaround time, I'm going to choose my lender wisely. I'm also going to have done all the review of the documents. Part of my job is to make sure that it's packaged well for my lender so that everything is, upfront. I've explained everything, and it's my job to make it look good so that the client is more successful, so that they will turn it around more quickly. So saying that, having, all your documents, up to date, making sure I've got them, that's certainly going to make the turnaround faster, because you're right. If I'm just dribbling and drabbling in one document after another, absolutely they get frustrated, right? That will go to the bottom of the pile for sure. And some lenders require all documents up front before they'll even look at your file. So it's really important to be prepared.
And my understanding is that you package it too, like to make the applicant look good, as opposed to, just throwing it at them and be like, are you going to accept it or not?
Exactly. Yeah. I have to. Yes, that's right. I can't just say, right, people, give them a mortgage, please. Yeah. And I have to explain things like income. I mean, we were talking about the self-employed, 2020 and for some 2021 was a bad year due to COVID. Right. So a lot of self-employed borrowers say, well, don't they know that COVID happened? Of course, I didn't make as much money in 2020. So we need to make sure that we address that, possibly look at, doing a longer view of the income and piecing it together that way. So that's a lot of my job. That's a lot of what I do. And knowing who's best suited to that.
Have you found anything different in terms of foreign buyers trying to get mortgages, like pre-pandemic, during pandemic, and now?
I didn't have any foreign buyers during the pandemic, but they are starting to come forward, right? And we have this big immigration push. So that's definitely something that I'm going to be working on, is making sure that I'm on top of all the lender requirements for new to Canada, non-resident files, because I'm expecting more of those certainly coming soon.
Okay. And then also, I know a lot of realtors watch my videos on my YouTube channel. Like, do you have any tips or advice for them when some, like, regarding mortgages?
It's really important to understand that mortgage qualification for the majority of lenders is based on income,
Yeah.
not a large down payment. Realtors always say, well, how much down payment do they have? It doesn't really matter. It doesn't, it's sometimes it's even easier to get a mortgage that has, mortgage default insurance, which is having less than 20% down. So, yes, there are certainly what are called equity programs out there. But just because your client has a 40% down payment, that is not a license to get a mortgage. And I get that a lot. They say, oh, well, a huge down payment. I didn't think it'd be an issue for them to get a mortgage. Well, but how are they, it is, because the lender is going to want to make sure they can pay their mortgage.
Yeah.
House does not make payments on your mortgage for you.
So an example would be like there's $1 million property and they have a 40% down payment, which is $400,000, but they're asking for a $600,000 mortgage, but their income is like $30,000 a year. So they probably maybe qualify for like $100,000 in mortgage or something like that, or 200,000 maybe. And so that's why they can't get the $600,000 mortgage. That would be an example.
It's pretty darn hard to qualify for a $600,000 mortgage on a $30,000.
Yeah, something like that, right?
Yeah. You'd qualify for $125,000 in mortgage.
Okay.
Example.
Yeah. In that case, I guess, so down payment may be important. Like, sure, if they can only qualify for a $100,000 mortgage, but if they're buying $1 million property, then hopefully they have a $900,000 down payment.
Exactly right.
Right? That would work.
And like I said, there are certain, mortgages that are more equity based, but sometimes they come with a higher cost. So people aren't expecting that, right?
Yeah.
Okay, I can get you a mortgage with your 50% down, but it's going to cost you 4, 5, 6, 7%. If you're like, whoa, wait a second, no, rates are 1%.
Yeah.
Which rates are not 1%, and also, yes, maybe they're low, but that's not the box that you fit in.
Exactly. We can talk about like alternative sources of financing later in another video, like about private lending and the pros and cons and those kind of things. But I guess in this video, we're just talking about what's going on in the market right now. What are some general concerns that people always ask me about, and some concerns that they probably ask you about. And do you have any other like last thoughts on, what's going on in the market?
Just to help people, just so fixed rates are based on the bond yields.
Yeah.
If you have a fixed rate, you're listening to all this talk about the Bank of Canada raising rates, you will not be affected. It's for variable rate holders and those with HELOCs and lines of credit, because those are based on prime rate as well. Just know that there are certain ways to kind of help you manage an increased payment. If you do want to, talk about it, reach out to your mortgage broker. There are certainly ways to pay less interest, to manage those payments. There are certainly ways we can deal with that and come up with a strategy to help. So don't always believe the media. Here, this is what I don't want you to believe: the media. I don't want you to listen to people who got mortgages 25 years ago. And I don't want you to listen to coworkers who've only gotten 1 or 2 mortgages. Because they know what they know about, but they don't necessarily know about mortgages. So seek professional expert advice.